Greetings, class. Just wanted to touch base with you as I've had a couple of questions via email about the stock project, and this is usually one I like to walk you through in class, and obviously, thanks to some unforeseen circumstances, we're not able to do that this time, but I can still try to walk you through it. And if you have questions, use the discussion board feature on Canvas. I'll try to get to those as quickly as possible. I'll also try to sometime Thursday, and I'll post this, probably email it to everybody as well, a time probably late Thursday morning or Thursday afternoon to have a more synchronous discussion on Zoom or Flipgrid. So we'll go ahead and try to do that sort of thing as far as having a live conversation if you have questions. But here's the basic idea, and that is you're going to buy 10 company stocks. So essentially, you're going to invest in, with fake money, of course, 10 companies. You're going to track their stock price over the course of the rest of the semester, and we'll see how our portfolio does. That's really the basic gist of this, and it looks really confusing, I think, because I have just simply a bullet-pointed list to show you right now instead of kind of step-by-step instructions, because, again, the idea was to walk you through how to do this. So there's basically 3 parts to doing this, and you do parts 1 and 2 kind of simultaneously, and then part 3 we'll worry about in May, because that's a reflection at the end of the project where you just talk about what you've learned. So let's start with kind of the bare bones. Number 1, you see here you've got $10,000 to spend, and you need to buy stock in at least 10 different companies. And then essentially part 1 is this part here, where you research the companies you buy and write a short report on each. And so what we're going to do is we're going to just do a simple written assignment here. So you'll copy this information over to a written assignment, and then you'll just do a summary for each company. So here's the basic idea, and I'll kind of walk you through how to do that momentarily. But really, the next part here is we're going to do our spreadsheet. And the first thing you want to do, click on the link here, and it'll open up a Google Drive file. First thing you want to do, File, make a copy, and then put your name in it. And so put your name in it because, number 1, you can't edit this document. And number 2, I don't want you to edit it because this isn't a community project. We're not going to be doing a community document. So essentially what you're going to do is you're going to pick 10 companies. And I like Yahoo Finance a little bit better than Google Finance, but essentially this search bar is going to be what you're looking for. And obviously you can Google stock tips or what companies you want to try to invest in or things like that. But if you want to do what most students do, that is just pick companies you know, you're familiar with, and things like that. The biggest thing is, I think I mentioned that I want them traded on a major exchange, and you don't need to search exchanges or anything like that. Just kind of think about a company, and not all companies are publicly traded. So not all companies sell stock. For example, you're not going to find Chick-fil-A because they don't sell stock. They're a privately held company. They're a sole proprietorship or a partnership. They're held within the family, and so they don't sell stock. But, for example, McDonald's does. And so when you open this up, it'll give you a bunch of options for McDonald's. Usually the main one is the top one. And where I says NYQ, that's basically, okay, New York Stock Exchange. That's really nothing you really need to concern yourself with. I just wanted you to kind of say, okay, they need to be listed on stock exchanges just so you have an idea of, if you've got a bunch of options, which ones to get. Usually if there's a period in the stock symbol, don't go for those. But here, we see McDonald's. So we're going to start with McDonald's here. And so here's the McDonald's Corporation. And so what I'm going to do is I'm going to have my spreadsheet here next to the McDonald's Corporation page so we can kind of see what's going on here. The things we want to concern ourselves with to start with here, this is the stock price. Okay, that is always the current stock price. Now, if you're doing this between the hours of 4 p.m. in the afternoon and 9 in the morning, you're going to have an after hours price too. Don't worry about that. This is the most recent price. This is speculative based on after hours trading and what the computers think they will do, but the only time that we see actual prices is between 9 a.m. and 4 p.m. when the market is open, especially with NYSE stocks. And see, this is where it says NYSE. That's what I need to have something that's listed on a major exchange. That's not really a huge deal. If you have something that's OTC or what we refer to as over the counter, that is fine. So first things first, you're going to write down McDonald's, and you can write down McDonald's or McDonald's Corporation. I'll just stick with McDonald's. The stock symbol here is these 3 letters here. This is going to become important because over time, you're going to constantly be researching these company stock prices. And so what you can do is then you can type in the stock symbol in the search bar and it'll take you to it. So McDonald's right now is at $137.30. So let's say I have decided to buy McDonald's stock. So I'm going to put in the price that it currently is, which is $137.30 in the buy price. And I have $10,000 to spend, and I have to buy 10 stocks. Generally, what I'm going to try to do is maybe spend $1,000 per company. So $137 for a share of McDonald's is about 7 shares. So, and that works out to $1,000. When you buy stock in a company, and we're going to do our chapter on stocks here in a little bit, but when you buy stock in a company, what you're doing is you're buying a piece of ownership in that company. And so it's important to understand you're an owner. You get a vote for the board of directors who runs the company. You get a piece of all the profits, and we call that the dividends. And if you want to see how the company is doing, this is how it's done over the last day. And you can look at the charts here. We can see McDonald's over the last week, or the 5-day chart, has dropped somewhat precipitously. This is what it's done over the last 6 months. You can also look at the 1-year and 5-year charts. We can see McDonald's here over the past year has lost a lot of its value, but over 5 years it's gone up. And I think we're seeing this big cliff here for McDonald's, but understand that long-term stocks generally go up. In the short term, they'll be very volatile. And I'm going to come back here to the 1 month here. You see there's a drop, it rises again, it drops again, it goes way down. In the short term, they can be very volatile. McDonald's stock's lost almost half of its value in a month, but we're also in the midst of some unprecedented times. It says short-term, mid-term, long-term. If you want to kind of think before you buy, it'll tell you what the experts think is going to happen to the price of McDonald's stock. So anyway, let's kind of look here at the financial information on McDonald's then. And we've got it in our little document here. And so I'm going to start out here for each company here. McDonald's is my company. Stock symbol is MCD. Okay. The price that I bought it at was $137.30. Okay. And so the 52-week range is the 52-week high and low. So what is the highest it's been and the lowest it's been? So 124.23 has been the lowest, and 221.93 is the highest. Now you notice something here. The lowest the stock price has been in the last year is also the lowest it was today or the previous trading day. And that's not really a good thing. Just to kind of explain what some of these other things are. Volume is how many shares are traded or how many shares are out there. What's the average volumes? How many get traded? The market cap is basically the volume times the share price. So that's essentially what is the valuation of this company. One to look at is the Pde ratio. We'll talk about this a little bit more when we study stocks. That's the price to earnings ratio. That is the earnings per share. How much money does McDonald's earn per share, which is right here, divided by the stock price. And so this can be an indicator of bargains, because if the price to earnings ratio is really low, that means the stock price is pretty low compared to how much money the company is earning. And the forward dividend and yield. Okay, the forward dividend is $5. In other words, McDonald's makes for each quarter, which is each 3 months, $5 of profit per shareholder. So if you own a share in the company, you're going to get a dividend of $5 in all likelihood. And so the yield is 3.39%. That's basically the dividend divided into the stock price. So that's, or excuse me, the dividend divided by the stock price. So, which is 3.39%, which is actually really good for a stock. But we see here the long-term outlook for McDonald's does not look good. I purchased 7 shares. Company website. Well, Google is your friend here. So let's Google McDonald's and see here we can get to the company website at mcdonalds.com. And one of these days I'll learn how to type. Now, when you get to a company website, you can find out a lot about the company. But one other thing you can often do is if you look here at, it's often at the bottom or a top menu, there's going to be an investor relations tab for the company. And it's interesting because you're usually able to find it pretty easily on McDonald's, and doesn't look like that's very easily available right now. But about us, this is a good thing to do. And here, there's the investor relations tab. So we can find out what the company is doing. This is basically what they're trying to tell people who are buying stocks. Who is the company? So what you can do is you can use this to write, again, just 100 words based on what the company is. Now, you do need to source it at the end. Do this for all 10 of your companies that you purchase. And so hopefully that helps. So basically, here's what we want is by the end of the week, you should have your 10 stocks purchased. Okay, so we've got McDonald's. Let's maybe pick Apple. And so Apple Inc. is AAPL. So I'll write in Apple. And their stock price is $246.47. So that's my price at the time I buy. And again, I got $10,000, so I'll put in $246.47. I bought 4 shares of Apple at $246.47 a piece. Now, over here on the far right, it'll actually tell me how much money I've invested in these companies. And that is how much money I've spent. Now, here's the thing with the stock market. You buy the stock, now it's just like going to the store and buying a good. You've got it. You own it. You don't make any money off of it till you sell it again. And so what's going to happen is on May 15th, or actually probably on May 18th, when we get to the end of the semester, we're going to use the closing price. We're going to close out the year on May 15th. Whatever the prices are at the close of the day on May 15th is what we'll do. So what we'll do each Friday, and really any weekend between 4 o'clock Friday and 9 o'clock Monday, what you can do is write down the prices of all of your stocks. And then on May 15th, when we wrap it up, you'll be able to write down the price, and it will automatically calculate over here and sell the amount of money you made selling the stock. So let's say McDonald's is now trading for $150 on May 15th. What we would do, I'll just type that in, is now 7 shares of stock times 150 is $1,050, and I would make a profit then of $88.90. I don't make any profit till I sell the stock. So say Apple trades at $250 on May 15th. 250 times 4 shares is $1,000, so I made $14.12 profit. And so you make your profit based on the stock you sell. And so the first thing you need to do, pick your 10 companies, write down the name of the company, the stock symbol, which is again right here. Number of shares, that's how many you want to buy. And again, I usually try to keep it at about $1,000 per company. Google is a good example of a company that is not going to be at a and we'll talk about stock splits in a bit, but Google, because of that, their stock prices are really high. Amazon is the same thing. So if we buy Google, we've got 1 share, and I'm just going to buy 1 share at $1,096.80. And so, again, what we'll do is we will track the stock price each week. I'll give you a reminder on Friday to look up the stock price over the weekend. Now, if you forget to over the weekend and you get to Monday and you're like, oh no, I forgot to update my stock prices, you can always go here to previous close anytime on Monday and it'll tell you the closing price from the day before. And so that's something to kind of look up at. Don't look at these buy and sell buttons because you might actually buy and sell their stock, and that maybe isn't the best thing to do unless you really want to spend some of your own money doing this, which is, again, something that I hope you might be willing to do in the future. But right now, let's practice. And obviously, people generally hold stocks for the long term. What you're not going to have here is us holding it for the long term. We're going to look at 2 months. Now, 2 months can be very volatile. And so right now, the market is really volatile anyway. So it'll be interesting to see how things go and the ups and downs. Now, let's talk really quickly about why are stock prices what they are. Simple economics, supply and demand. Basically, if I want to buy a stock, I'll put up an order to buy the stock. And essentially, the market sets the price. So if there's a bunch of other people wanting to buy Google stock, now we're competing with each other and we're bidding up the price. And so anybody selling can take the highest price that's available, technically. If there's a bunch of people trying to sell Google stock and nobody trying to buy it, well, of course, that's going to drop the price. And eventually, as the price goes down, you'll find people willing to buy. And so essentially, the stock price that's quoted is the price of the last trade that was made of this stock. So supply and demand set stock. So what causes stock prices to go up is obviously increased demand for that stock. You've got more buyers than you do sellers, and the buyers compete with each other and drive up the price. Now, why do you do that? It's because the company is valuable or people expect the company to be valuable. One thing Warren Buffett often tells people to do is look for dividends. If the stock pays a dividend, and we notice McDonald's paid a dividend of $5 a share, that's great. That shows you the company is profitable. If a company does not pay a dividend, and look here, Google does not pay one, that generally means the company is not turning a profit right now. There are no profits to distribute to the stockholders, and that is why that's why they're not paying a dividend. They're not making a profit right now. The company is losing money, so there's no profit to distribute to the owners. And notice Google's earnings per share is their price to earnings ratio is significantly higher than McDonald's. And so we might think McDonald's is a little bit more of a bargain stock than Google's because McDonald's makes more earnings per share and the price to earnings ratio is lower. So hopefully that gives you an idea. So what you need to do, again, type in these first 4 columns of your spreadsheet for 10 companies here and fill this out. And this number down here will always tell you how much money you have left to invest. By the way, you cannot buy half shares. So if you spend a little bit less than $10,000, it's okay. Then each Friday, we'll update the stock prices. And notice I do hope that you at least do that a little bit over spring break. And then what we'll do as well over the next week or two, and I don't expect you to work over spring break per se, other than maybe tracking prices. And by the way, you can always use this chart as well to go back over the last month, and you can track prices on any given day. There's also a way to do so by looking at the daily closing price on Yahoo Finance. So you can look here at the historical data tab, and it'll give you the daily closing price each day. So that's another option for you as far as if you missed a day and you need to fill out your chart, you can use that. Now, the second part is take the financial information for each company, put it into a Google Doc or something, write your 100 words. Here is my suggestion. Write the financial information down as soon as you buy the stock, because that's only going to take you a few seconds. And then do 2 companies a day. Research and write the 100-word summary for 2 companies each day, and you'll have it done in a week. This is really the hard part of the stock project, because you do have to research, you do have to write a little bit about what each company is and what it does. Then when you're done with that, what you can do as well, make sure you have sources. You put your sources, try to put them in MLA or APA style, use EasyBib for that, and then you'll be good. So if you have any questions beyond this, feel free to use the discussion forum on Canvas, and I hope that I've explained it to you fairly well, but feel free to use the discussion forum on Canvas for any other questions, and I will try to host a live Q&A probably early Thursday afternoon, and I'll give you the time and login information for that, and it'll either be on Zoom or Flipgrid, but we'll get something figured out so that way we can have some conversations. My email is always open. I try to respond to emails at least same day, and usually sooner than that, and maybe within a couple of hours is when I try to respond to emails. And so you can always check email. You always get to me there. If you have questions, also, you can use the discussion forum feature. And number one, I can answer questions, but number two, you can help each other out. We've done this stock project for years. I did it as a student 30 years ago, and it was a lot of fun then. We've kind of modified it a little bit for the internet age, but it is something that a lot of high school students do. And I think this creating a portfolio gives us some real life examples and some real life opportunities to see how the market works and how stocks work. So if you have any questions, put them on the forum and or email me, and otherwise, good luck and enjoy.